Welcome back to Dinar Community Channel. The global financial world has been shaken by a development that many had speculated on for decades but few believed would actually arrive so suddenly. The Iraqi dinar, long considered one of the most undervalued currencies in the world, has undergone a dramatic and unexpected revaluation, sending shockwaves across financial markets, banking institutions, and investment communities. The surprise announcement caught even seasoned investors off guard, as the currency's value skyrocketed virtually overnight. The result was a frenzy of activity at exchange centers, banks, and private brokerages, as investors rushed to cash out and secure life-changing returns. For years, the conversation around the Iraqi dinar had been filled with uncertainty, rumors, and a mix of optimism and skepticism. Many dismissed the idea of a revaluation as mere speculation, while a dedicated group of believers continued to hold their dinar reserves with the hope that Iraq's economic and political reforms would one day drive the currency to parity with leading world currencies. What made this event remarkable was not only the suddenness of the revaluation but also the scale of the response. Banks in major cities reported record traffic, with investors lining up as soon as word spread, determined to exchange their dinars before market adjustments or policy shifts could take effect. The scene at financial institutions resembled historic bank runs, except in this case the rush was not out of fear but out of an unprecedented opportunity. Investors, both small and large, flooded exchange centers, some clutching envelopes of dinar notes they had held onto for years, others armed with digital certificates stored through private investment platforms. Many had bought their dinar at extremely low valuations, often paying fractions of a cent per note, never fully sure whether their patience would pay off. When the revaluation was confirmed, the magnitude of their decision became clear. Returns were not just modest gains but in many cases exponential windfalls. This sudden development did not emerge in a vacuum. Iraq has spent the past several years quietly laying the groundwork for economic modernization, building reserves, and stabilizing its oil-dependent economy. With international partnerships strengthening and infrastructure investment expanding, the country had been signaling that a currency adjustment could eventually be in the cards. Yet, no one outside the highest levels of government and global financial regulators expected such a drastic move to occur at this moment. The secrecy surrounding the decision ensured that the revaluation would hit markets with maximum impact, and when it happened, the dinar instantly became the focal point of the financial world. Inside Iraq, the revaluation was framed as a long overdue step toward restoring national pride and financial sovereignty. For years, the dinar had been a symbol of the country's struggles through conflict, sanctions, and instability. Now, with a stronger valuation, it represented a new chapter in Iraq's economic future. Government officials described the move as part of a comprehensive strategy to integrate Iraq into global markets, attract foreign investment, and increase the purchasing power of Iraqi citizens. For ordinary Iraqis, the change translated into greater strength for their currency, improved opportunities for trade, and a renewed sense of confidence in the nation's financial institutions. Outside Iraq, however, the story played out differently. The immediate concern among financial analysts and economists was how such a revaluation would ripple across global currency markets. Currency traders scrambled to adjust positions, hedge funds recalibrated portfolios, and banking systems were pressured to handle the sudden demand for exchanges. Investors who had long held dinar as part of speculative portfolios began contacting their banks and brokers, leading to a surge in exchange requests. The revaluation not only affected those who had invested directly in dinar but also influenced markets tied to oil, commodities, and Middle Eastern trade flows. The emotional side of the revaluation cannot be overstated. For many investors, particularly those who had faced ridicule or skepticism from peers for holding on to what was often called junk currency, the moment was deeply validating. Online communities dedicated to dinar speculation lit up with celebratory messages, stories of financial transformation, and accounts of investors rushing to banks to secure their new wealth. Families who had quietly stored dinar away for years suddenly found themselves in possession of fortunes. Stories emerged of retirees paying off mortgages, parents funding their children's education, and small investors suddenly finding themselves thrust into the category of high net worth individuals. But alongside the euphoria came challenges and risks. Banks quickly imposed structured exchange procedures to avoid chaos, requiring appointments and identification checks. Some institutions limited the amount that could be exchanged in a single transaction, citing concerns over liquidity management and regulatory oversight. Governments also moved swiftly to implement taxation and reporting requirements, reminding investors that windfall gains would be subject to existing financial laws. For some, the process of exchanging dinar was straightforward and celebratory. For others, it involved navigating complex procedures, waiting in long queues, and facing uncertainty about the exact rates they would receive. The pace of exchanges was staggering. In major U.S. cities like New York, Chicago, Houston, and Los Angeles, reports surfaced of banks operating extended hours to process the surge. Similar scenes played out in Canada, Europe, and parts of Asia where dinar investors had quietly accumulated holdings. Digital platforms that facilitated currency trades saw record-breaking traffic, with servers struggling under the weight of demand. In some cases, smaller institutions temporarily paused transactions to prevent system overloads. Despite these challenges, the overwhelming trend was clear. Investors were cashing out fast, eager to lock in their profits before the market environment could shift. The surprise nature of the revaluation also fueled a secondary market of speculation. As early investors began cashing out, others who had not yet exchanged started debating whether to hold longer in hopes of even higher rates. Rumors circulated of contract rates, private exchange agreements, and potential tiered systems designed to reward larger holders or those with established banking relationships. Social media buzzed with claims of investors receiving premium rates through special programs, further driving excitement and in some cases frustration among smaller holders who feared missing out on the best opportunities. Economists pointed out that while the revaluation was a powerful event, it also required careful management to prevent overheating or imbalances. A sudden influx of wealth into certain markets could have destabilizing effects if not managed through structured programs and guidance. In the United States, financial advisors began issuing urgent notes to clients, warning them to plan carefully, avoid reckless spending, and consider long-term wealth management strategies. The same was echoed in Europe and Asia, where financial professionals saw an opportunity not just for their clients to profit but to use newfound wealth responsibly and sustainably. The broader implications of the revaluation are only beginning to unfold. With Iraq's currency now strengthened, the country gains significant leverage in trade negotiations and investment partnerships. Oil contracts denominated in dinar could alter global pricing dynamics, challenging the dominance of the petrodollar system. Regional neighbors are watching closely, evaluating how Iraq's move might influence their own financial strategies. On the global stage, institutions like the IMF and World Bank are expected to weigh in with assessments of the long-term sustainability of the dinar's new value. For investors who cashed out early, the experience has already been transformative. Many describe it as surreal, years of waiting suddenly culminating in a windfall that changed their financial reality overnight. For those still holding dinar, the decision of when to exchange remains complex. Will rates climb even higher? Will governments introduce caps or stricter regulations? Will market volatility erode gains if they wait too long? These questions are fueling an ongoing debate, ensuring that the dinar remains at the center of global financial attention for the foreseeable future. The surprise revaluation of the Iraqi dinar stands as one of the most extraordinary financial events of the decade. It highlights not only the unpredictable nature of global markets but also the potential rewards of patience and strategic investment. While the frenzy of exchanges continues, the true story of the dinar revaluation is not just about money but about belief, perseverance, and the willingness of individuals to hold on to hope even when the world doubted them. As banks continue to process exchanges and governments adapt to the new reality, the legacy of this event will likely inspire new generations of investors to rethink what is possible in the ever-evolving landscape of global finance. The momentum shows no sign of slowing. Exchange centers remain busy, investors continue to share their stories, and analysts around the world scramble to interpret the deeper meaning of what has just occurred. The revaluation has redefined wealth for thousands of individuals and reshaped the narrative around Iraq's place in the global economy. What comes next is uncertain, but one thing is clear: the surprise revaluation of the Iraqi dinar will be remembered as a moment when the impossible became reality, and when ordinary investors experienced an extraordinary transformation almost overnight. At its core, this event is a reminder of how interconnected the financial world has become. A policy decision in Baghdad has triggered a chain reaction across continents, affecting banks in London, investment houses in New York, and currency traders in Tokyo. The lessons drawn from this moment will be studied by economists and policymakers for years to come, as they explore how sudden shifts in currency valuation can ripple through every corner of the global system. Yet beyond the theories and data, the most powerful stories will come from the people whose lives have been changed forever by a decision they had once only dreamed of. The dinar revaluation has not only validated long-time holders but has also forced the financial world to acknowledge the unpredictability of economic shifts. The reality that investors cashed out fast, securing life-altering gains, underscores the urgency and intensity of the moment. Whether viewed as a once-in-a-lifetime opportunity, a carefully orchestrated plan, or a bold gamble by Iraq's leadership, the result remains the same. History has been made, and the Iraqi dinar has entered the global stage with a strength that no one saw coming this soon. In the end, the story of the Iraqi dinar revaluation is not yet finished. The frenzy continues, the debates rage on, and the implications continue to spread across markets. But for those who were prepared, who held their currency through uncertainty, and who acted quickly when the moment arrived, the outcome is already written, a financial windfall born from patience, faith, and timing. Investors cashed out fast, and in doing so, they became part of one of the most remarkable financial surprises of modern times. Like and subscribe for more videos.